Hello everyone and welcome back to TradeSmart, where we test objective rules-based strategies and code the best ones into highly customizable trading scripts that can be turned into automated trading bots. In the last 2 years we released 15 different premium strategy scripts such as the triple EMA, higher high lower low, divergence scripts and so on. For these scripts we made a total of 42 optimizations for different asset and timeframe combinations, mainly for crypto and a few for forex, stocks and the S&P 500. As Bitcoin halving is right around the corner, I thought it was time to review all of these optimizations to find the best ones for the next crypto bull market. So basically we will compare 42 strategies to find out which is the best for the next crypto bull market. But why is this important? The crypto market historically moves in 4-year cycles. Each 4 years we get a Bitcoin halving, which usually triggers the start of the next bull market. In the last 3 cycles, the market behavior is clear and repetitive, therefore somewhat predictable. Right after halving we get a powerful uptrending period, then the cycle top, followed by a strong downtrend, finally a sideways trending period, and a slight uptrend right before the next halving. And when was the last halving? In May of 2020. So the next halving is expected to occur in the second half of April or early May 2024. So we still have around half a year to get prepared with a strategy and an investment plan. If the crypto cycle continues to behave the same as before, we have a great bull run ahead of us with a lot of opportunities to make profit. Of course, this is not a guarantee and not financial advice by any means, these are my personal opinions only. In this video, I will go over all the 42 optimizations to find the most suitable one for the next crypto bull market. I will explain how the strategy works in more detail, but keep in mind these optimizations are usually too complex to trade manually, that's why we are using our own scripts for that. Just before I get into it, I have 2 important announcements. First, we are having a Black Friday sale which starts right now and lasts until the 1st of December. If you buy the yearly Smart Trader tier subscription plan on our Patreon now, you will not only get access to all of our premium scripts and optimizations for 1 year, as a bonus you will also get lifetime access to one of our premium scripts for 100% free. Keep in mind that this offer is limited for the first 5 person only. If you are one of the lucky first 5, we will contact you and you can choose one out of our 15 highly customizable premium scripts that you want to have forever. If you are interested, hurry up not to miss this offer, pause the video and head over to our Patreon, link is down in the description, and buy the yearly Smart Trader tier subscription. And what's the other announcement? Next month we will start a 1k to 10k crypto challenge where we take $1,000 and attempt to turn it into 10,000 during the upcoming crypto bull market. To make this challenge more interesting, I will be using artificial intelligence to find cryptocurrencies with 10 to 100x potential, to rate them, to create my portfolio, and so on. The whole process will be documented here on YouTube on our channel. In this series, I will be fully transparent with all of my trades and decisions. In each video, I will show my full portfolio, what I bought and what I sold. I will also share many useful sites and tools that I use to complete this challenge. So, if you don't want to miss it, make sure you are subscribed to our channel and turn on the notification bell so you won't miss any episodes. And now, back to the video. Here's a list of all the 42 optimizations. The first column is each optimization's ID. Then the optimized asset, then the time frame, the optimization date, and the fee rate we used on each optimization. We are constantly monitoring how each optimization performs each month, so we can decide which one is over-optimized and which passes the live trading simulation test. Naturally, we had a few optimizations that have already failed the live market test. These are highlighted in red. So first of all, let's eliminate those. Next, as we only want crypto optimizations, let's eliminate all that are optimized for forex, stocks, or anything other than crypto. By the way, all of the results are generated on Binance trading pairs. Moving on. We want realistic results, so we can eliminate all the optimizations that are not using any trading fees. From 42 optimizations, we are already down to 21. And now the real filtering begins. As I want to know which optimization could perform the best from now on until the top of the bull run, I checked how each optimization performed in the last cycle until the first run up top, which occurred around the 14th of April 2021. I eliminated all optimizations that had less than a 1.2 profit factor. This way we say goodbye to optimization number 2, 3, 5, 15 and 24. Next up, I used another filter that I usually work with nowadays, which is the net profit divided by max drawdown. As I usually adjust my position sizing according to the maximum drawdown to be less than 15 to 20%, this is an important value. The higher this value, the better it is. I decided to eliminate every optimization that had a less than 4 net profit divided by max drawdown ratio. This way, optimization number 21, 29 and 30 were eliminated. Moving on. Recently Bitcoin had a nice run up from the 12th of October till the 19th of November, so in the next step I checked how each optimization performed in this period, as this is the most recent bullish market period. Every result that had less than 1.2 profit factor in this period will be eliminated. As a result, I had to let go of optimizations with the ID of 6, 22, 26, 31, 36 and 39. And finally, I analyzed the remaining 7 optimizations by myself. I checked how many entries they took and if they were great quality entries or not. I also checked how many of the recent big upswings did each of the remaining optimizations entered on and how good the exits were. After reviewing these 7 optimizations, I put them into 3 categories. The ones which are the worst got a no, the ones that have passed but not the best got an OK, and the best ones got a yes rating. The ones that made it are the optimizations with the ID of 23, 33, 35, 40, 41 and 42. If you are already one of our Patreon supporters, you can look through these optimizations and find the one that suits you the most. Okay, but which one was my personal favorite? I went over all of these optimizations and I tested 3 time intervals. The first starts at just around 4 years ago on December 1st until the first bull run top in 2021. This period simulates most accurately what can we expect right now if the cycle repeats itself exactly like before. The second interval is for only the main section of the previous bull run, which started on the 18th of March in 2020 and ends at the first stop of that bull run on the 14th of April 2021. And the third time interval starts when Bitcoin price started uptrending from its bear market lows and ends when I was making this video on the 19th of November. If an optimization performs great on all these 3 intervals, in my opinion, it has a high potential to generate good results. Again, this is not financial advice and I am not a financial advisor. So which optimization I prefer? I found that the optimization number 35 works on many assets and timeframes such as Bitcoin, Link and Litecoin, which is a good sign. But my absolute favorite was optimization number 40, long only version on the 15-minute BTC USDT chart with a 3% risk per trade compounding setup. This strategy is our higher high, lower low smart money concept strategy. It performed amazing on all the 3 time intervals. On the main bull run time interval it took 71 trades, generated 820% net profit with an amazing 3.7 profit factor and 20% maximum drawdown. And on the recent bullish market time interval, which starts in January 2023, we get great results too. It took only 48 trades but generated 326% net profit with a 3.1 profit factor and 12% maximum drawdown. Now let's take a look on the chart and I will explain how this optimized strategy works. As I said, this strategy optimization, just like most of our others, are not a good fit for manual trading. It uses way too many indicators that are hard to monitor. That's why using TradingView scripts like this is crucial. Okay, here you can see the best optimization I found, which is our higher high lower low smart money concept strategy with the 40 optimization. Don't get confused of all of these indicators, I will explain it right away. As you can see, this script has many options. On the top we have the base logic, then the trade management options, position sizing, and then the filter section. Finally on the bottom we have the automation section. I have already set up all of the indicators that are needed for the strategy optimization. Let's go over them quickly one by one. First you will need the Smart Money Concepts by Loxalgo, this one. Then the NNFX ATR, this one. Then 2 EMAs. So click this 2 times. Then an SMMA, this one, a squeeze momentum indicator, this one, the candle momentum oscillator, this, and finally a simple volume, this one. As usual, I changed some settings. I will put a screenshot here so you can copy them. And if you don't already know how to do an indicator inside indicator setup, let me show you. Here is our SMMA. We want to use this SMMA to move according to our candle momentum on this candle momentum oscillator. To do that, just click on the SMMA and start pulling it down until you reach the candle. Then release it, then go into the settings and change its source to candle. Simple as that. And now let's see how this strategy works. The long entries are mainly dependent on the smart money concepts indicator. This indicator tells you when there is a change of character, a break of structure, and so on. For example, here the price was trending down, creating new bearish break of structure points like these. But after some time, we get a bullish change of character, and that happens when the recent swing high, this one, gets broken with this candle. Right after that, we can see a break of structure, and that occurs when we get a break to the upside after a bullish change of character was printed. These are usually good entry points as the market trends are shifting. Okay, now let's open up our script and see what did we set up there. For this optimization, we are only using internal break of structures. We will enter on the X break of structure point after a change of character has occurred, and the X value is set to 1. So basically we will only enter into longs if this setup occurs. A bullish change of character followed by a bullish break of structure. Moving on. Now let's go over the exit strategy. For the stop loss, we are using an ATR based stop loss which has a 14 length and an RMA smoothing, and the base risk multiplier is set to 3. This means that the stop loss is placed at a 3 times ATR distance. This line is our NNFX ATR and it represents this exact setup. Moving on, we are using a force exit based on squeeze momentum. This is our squeeze momentum indicator and it is set to an 80 kc length. Basically, we will exit a long position when the squeeze momentum turns from green to red. Next, we allowed a move stop loss to break-even function. We set it to ATR based. It uses the same 14 length RMA smoothed ATR as the stop loss, and the ATR factor or the ATR multiplier is set to 4.5. As our stop loss is set to a 3 times ATR distance, and our move stop loss to break-even value is a 4.5 ATR distance, that means when we get a 1.5 risk to reward ratio, we reach the 4.5 ATR distance. So after the close of this candle, the stop loss has moved to a break-even level. Back to the script. We are not using a trailing stop loss as we are using a squeeze momentum force exit. Here is the base setup. We only allow long entries, and we are using a 3 risk percentage current setup, which means that on each trade we are risking 3% of our capital, and the position sizing is compounding. The next setting is the do not enter trades near the last winning trade, and it is set to 25. As I was optimizing, I found out that after a winning trade, it is better not to enter into a new trade quickly. So, after a winning trade, for 25 candles we can't enter into a new one. And we are at the filter section. For long positions we are using a simple trend filter. I set up the EMA with a 100 length and with an HL2 source. That's exactly this blue line what you can see. We can only enter into a long if the price is above this blue line, and if we would have allowed shorts, it could only enter shorts if the price is below that. Let's scroll further. We are not using any RSI limiters, but we are using the candle momentum filter. The candle momentum filter is this one. In case of long positions, we set the candle momentum length to 100, its source to HLCC4, the MA type to SMMA. Remember when I showed how to move the SMMA on the candle momentum? And it uses a 20 length. The rule is simple. Long entries are only allowed if the candle momentum line is above the candle momentum based SMMA, which is this white line. Moving on, we have a candle height limiter. It is set to candle body, so it will base its calculation on the candle body. And we only have a high limit of 0.85. This value is in percentage. What this means is that we can only enter into a long position if the entry signal candle is lower than a 0.85%. Let's check that. I am using the date and price range tool and start measuring from the bottom of the signal candle until the close of it. And as you can see, it is a 0.73% move, so it is less than 0.85, which makes it a valid entry. We are not using a Keltner channel filter, or Bollinger Band filter, or an ADX. But what we will be using is a simple volume filter that is placed here on the bottom. With this filter, we only enter trades when the volume is higher than the volume-based moving average. The moving average is set to SMA and its length to 2. A 2 length basically means that the volume on the entry signal must be higher than the previous volume. And here, as you can see, that is the case. And finally, we are using a trading time limiter. We only allow Monday, Tuesday, Wednesday, Thursday, Friday. So trading on weekends is not allowed. And that's it. This is the whole strategy. So now let's go over this simple example. On this candle we got a valid long entry signal. First of all, we got a bullish change of character, followed by a bullish break of structure. The close of the price was above the 100 length moving average. The candle momentum line is above the candle momentum based moving average. The volume was above the volume based moving average. And we didn't have a winning trade in the last 25 candles. The candle body height is not bigger than 0.85%. And as this trade occurred on Tuesday, this is not a weekend trade. All of the conditions are met, so we can enter into a long position. Stop loss is placed at the NNFX ATR line, which is right there. We won't have a fixed take profit. Instead, we will be using the squeeze momentum indicator to exit this trade. But right before that, we will move our stop loss to a break even if the price reaches a 1 to 1.5 risk to reward ratio. And that happens right here. Finally, we exit the trade when the squeeze momentum turns from green to red, which happens right on that candle. And as you can see, on the next candle's open, the script exited this position. Well, that's the strategy. I know it's complicated, that's why we are creating these premium scripts. So if you want to get access to this one and to all of our other scripts and optimizations, check out our Patreon page and become a Smart Trader tier member. And that wraps up today's video. If you like this video, don't forget to drop a like, subscribe and turn on the notification bell so you won't miss our upcoming 1k to 10k crypto challenge. If you want to know more about the higher high lower low smart money concept strategy that generated the best results in this video, check out this video. As always, thank you all for watching, have an amazing day and see you in the next video.